Welcome everyone to the Fat Profits Wealth Management webinar. I'm Richard Lane and I'm one of the advisors here in Sydney, and I hope you enjoy this presentation. Most of us have seen this before, and it is important that everybody understands that the information that we'll talk about in this webinar is not intended to be personal financial advice. Everything we speak about is general in nature. We do not take your personal financial situation into account. Also, past performance is not a good indicator of future performance. Past performance is not a reliable indicator of future expectations. You should speak with a financial advisor about whether the stock market is suitable for you. Now, for an overview of the program today, we're going to look at the managed account service. We'll provide an in-depth look at how the service works. We'll explore some of the other avenues available to those considering a hands-off approach to their portfolio. Then we'll look to see the key benefits of our service, including a glimpse of our client's wealth management platform. And finally, we'll look at the fees and what it costs to invest in these accounts. Now, before we dive into this presentation, it's important to know that these managed accounts are not for everyone, and there are a few criteria that you'll need to meet as a very minimum before even considering whether it is an appropriate investment for your situation. First of all, this is a suitable investment for those looking to invest from an individual's name, joint names, or a company, trust, or SMSF. Second of all, the minimum investment is $50,000. This is the bare minimum. Keep in mind that some of our models invest in up to 40 stocks. Thirdly, you must be a resident of Australia or New Zealand. You also need to be aware of the risks that are involved in the stock market. If you're unsure of these risks, there's a fairly detailed list in our product disclosure statement, which is compulsory for all of our investors to read. So what is a managed account? At a very high level, it is a managed investment scheme similar to a managed fund or LIC, which allows our clients to have their portfolios managed by a professional team. The Fat Profits managed accounts give clients a fully managed, diversified portfolio in one of our models. A slightly more detailed look here shows the mechanics of the accounts. Fat Profits' role is as the investment manager. We do the research and portfolio construction, monitoring and active management of the portfolio. There are two other key players in the operation of the managed accounts who exist purely to ensure that Fat Profits can focus solely on our role as the investment manager. The first player is Linear Asset Management. They are our administrator and deal with all of the back office jobs. They deal with the brokers, they execute the trades, they conduct reporting for our clients, and they provide a powerful online platform that is available to our investors. The next key player is the custodian. The custodian exists to hold the investments on our client's behalf at arm's length from Fat Profits. The agreement in place allows Fat Profits to act in accordance with our PDS, namely to buy and sell shares. Of course, in these agreements, it is simple due diligence to ensure the integrity of the custodian. Fat Profits uses JP Morgan. Portfolio management takes place at the model portfolio level. This means that we can concentrate all of our resources and research on a small number of models, rather than spreading ourselves across a large number of portfolios that are all tailored. This also means that our clients enjoy wholesale brokerage because any change to a model is executed for all investors in that model at the same time. Equality is ensured here because we get no benefit from putting larger clients into stocks first. Now that we know how the managed accounts work, let's take a look at some of the other types of managed investments and how they compare. As you can see in this comparison between direct shares, pooled investments like managed funds, list investment companies, and ETFs, individually managed accounts, and our own managed accounts. You can't have everything, but we think that we've come pretty close. In fact, when setting up our wealth management division, we did look at a number of these options as potential vehicles. We landed on managed accounts because of their clear advantages. Some things to highlight are the lack of beneficial ownership when investing in managed funds, as well as a lack of transparency. Whilst individually managed accounts do allow for individually tailored portfolios, past performance is not easy to obtain, as each client will have a slightly different portfolio. The Fat Profits managed accounts are not tailored to each client. However, there are benefits to this that we were discussing in the previous slide, like potentially lower brokerage. Let's have a look at why Fat Profits, our clients, and indeed many people are favouring managed accounts, starting with beneficial ownership. One of the key benefits of managed accounts is beneficial ownership. The structure that we talked about means that rather than owning units in a share or shares in a pooled investment, our clients have beneficial ownership over each individual share. This in turn means that you have most of the benefits and rights of direct share ownership, like dividends and franking credits. Note that I said most benefits and rights. One key difference is that because the shares are held under the custodian's name and holder identification number, or HIN, correspondence, such as holding statements and information about corporate actions, will be delivered to the custodian, who will notify Fat Profits. We will then act in what we believe to be our client's best interest. Now, rather than being paid a half-yearly distribution, our clients are paid dividends as they are paid by the companies held in the portfolio. We conduct a monthly sweep of the dividends that are paid out to the nominated bank accounts on the 15th of the month, unless of course reinvestment is preferred. The next benefit is of course that you get your portfolio managed by professionals. The Fat Profits Investment Committee, headed by Angus Geddes, is constantly watching over the model portfolios. We have the information, resources, skills and experience to make decisions in a timely manner. Portfolio construction and maintenance is also crucial to ensure not only high returns, but high risk-adjusted returns. What I mean by that is for a given level of risk, you should be getting the highest level of return, because as we all know, the market will reward risk with return, but only if that risk could not have been avoided, for example by diversifying. Managed accounts are flexible and liquid. You can switch between our models at any time. The portfolios are almost as liquid as an online broking account. Now I say almost because there's no button on our platform that you can click to sell shares immediately, but generally if you submit a written request today, we will have the relevant holdings sold down the next business day. Now liquidity, it's a big one, and we do have a lot of clients who have tried managed funds and been burnt. Because of their size and pooled structure, they can run into liquidity problems, leading to a suspension of redemptions and an increase in the likelihood of losses to investors. We do not enforce lock-up periods or charge penalties for early withdrawals. You can liquidate at any time, and the only additional cost you will incur is the brokerage. Finally, due to the beneficial ownership setup, you can also transfer shares into or out of the managed accounts. We invest our clients into a diversified portfolio. That's right, these portfolios are designed to be diversified. Depending on the portfolio that you choose, we will be investing your funds across up to 30 or 40 high quality companies. Now, for those of you out there who have fewer than 10 companies and they're all big blue chips, you are vulnerable to periods of underperformance relative to the index when the market corrects, as it inevitably does. You can reduce this impact through careful stock selection, purposeful portfolio weighting, diversification, and strategic allocation toward different sectors and cash. And that's what we do for our clients. We will spread your investment across a variety of industries in our concentrated Australian shares, Australian income, and global opportunities portfolios. Of course, in the mining and resources portfolio, that will be focused on that particular sector. Now, having said all that, it is possible, in our opinion, to over-diversify. And for exactly that reason, we put caps on the number of stocks we can invest in, forcing us to make difficult decisions and only invest in our very highest conviction ideas. It can be tempting for a portfolio manager to add every opportunity that presents itself, and before you know it, you are holding 50 or even 100 stocks, and you're starting to look more like the index. This is something to be very cautious of, particularly if you are paying active management fees. Finally, let's look at transparency. Now we've spoken about some of the features that attract people to the managed accounts. And these are what get people to come in and give us a go, to try us out. But it's the transparency that turns a lot of our new clients into long-term investors with us. Nobody likes investing in a black box, so we offer our clients an institutional grade platform so they can track the details of their investment, know how many shares they hold in each company, know their profit and loss on each stock and on their portfolio as a whole, know their fees, transaction costs, and track how active that profits is being, and make sure that we are doing the job that you pay us to do. Now, I'm going to give you all a quick sneak peek at what our wealth management client portal looks like. Now remember, this is a web-based platform, so there's no need for any additional software to be downloaded or purchased. When you log in, you'll be greeted by a market update showing the ASX 200 and some of the major global indices, the gold price, and major Aussie dollar pairs. From here, you'll be able to access your account, which will give you a quick reference valuation for your portfolio and your gain and loss of the previous business day. From this screen, you can dig a little bit deeper by listing your account by security. If you have investments in multiple models, you can list your account by portfolio or by currency. Here you can see the detail we provide on your portfolio. You will be able to see your own personal purchase prices, and if you fund your account by transferring your existing stock holdings, we can set this up to show your historical cost base. Let's come back to your summary page and have a look at some of the reporting tools you'll have access to. Now, anyone who has ever invested through a stockbroker knows that transactions are one thing to keep an eye on. Whilst we don't notify our clients in advance what trades are going to be made, you will be able to track our trades. One thing to look out for here and anywhere else is a balance. You don't want unnecessary turnover, but you also want a portfolio that is actively managed. Fat Profits earns no commission or kickbacks from trades, and we are medium to long-term focused, so our turnover is relatively low. But we do want to take profits on companies that have had a good run and look like they might start to top out. Other things you can track are management fees, so that you know we are charging what has been agreed, and this is also where you can access a consolidated tax report which is released a few months after the end of the financial year. Let's take a quick look at our investment menu. We're focusing here on our primary platform, but we also have a small and mid-caps model offered through a separate product disclosure statement that you can ask our team about. We have 3 domestic portfolios here, one for growth, one for income, and a mining and resources model for those of you looking to take on some extra risk. Finally, we have a portfolio that concentrates on international equities for those of you who feel they already have enough exposure to Australian equities. Now, I'm going to walk you through the costs, starting with the Australian portfolios. There are 2 costs you need to be aware of. The first is a flat annual base fee, which all up comes to 1.76% per annum on the value of the portfolio. The second cost is brokerage, which as you can see is very low at 0.11% on any trade with a minimum charge of $3.30. Turning now to the global portfolio, since we are investing across multiple markets around the world, the associated costs are higher, which you'll find is common across all managers offering exposure to overseas markets. The annual base fee for the global portfolio comes to 2.52% per annum. Brokerage is very low for international shares at 0.22% with a minimum charge of $5.50. To put this in perspective, brokerage rates at CommSec for some major markets is 0.75% with a minimum charge of $65, rising to 1% with a minimum charge of $130 for the rest. That means to get into 30 international stocks with CommSec, it will cost a minimum of between $1,950 and $3,900. This is not even taking into account other potential costs like custody fees, which for 30 stocks would be around $60 a month or $720 per year. Finally, for the global portfolio, there is a performance fee of 15% of the excess performance. That's 15% of the excess performance that we will achieve above the benchmark, the MSCI World Index. This is also restricted by a high water mark. As we all know, there are a number of providers of managed accounts out there and countless managed funds that you can put your money into. It can sometimes be difficult to wade through all the information out there and come to a conclusion on exactly what option to go with. The purpose of this webinar is to educate you on what our managed accounts service is all about, but eventually you will need to reach a decision, so I will give you 4 key reasons why I think our service stands out above our peers. Firstly, we follow an extensively tested investment process that involves a contrarian perspective that we believe is crucial in times when most of the easy returns have been made. Secondly, we are not owned by a broker or bank, so we are totally independent and have our interests aligned with our clients. Thirdly, there is a high level of transparency offered through the Fat Profits Managed Accounts online portal and in the daily report written by Angus as well. We have previously offered a half-yearly report for our clients like managed funds do. However, we found that people tended not to read them because they were generic and a little bit uninformative. Our daily provides our clients with a constant update on their portfolio and our views on the market from the front line. And finally, as a result of this transparency, you will see that we are truly accountable for the portfolios. We have nowhere to hide because our clients can log in at any time and view their stocks and their performance. You don't have to wait 6 months before we send you your half-yearly report. You can log in anytime and also get the daily update from Angus. To sum up, over in the wealth management arm of Fat Profits, this is where we manage our clients' portfolios for them. We do this using a managed account that allows beneficial ownership to lie with the clients, whilst also providing the convenience of active management by our investment team and the benefit of a diversified portfolio that is flexible, liquid, and transparent. Applying is as easy as completing our online application form, which can be found in the wealth management section of the Fat Profits website. Please read the instructions carefully and make sure that you have the required documents scanned to your computer before starting. If you do not have access to a scanner or you have any other questions, please contact our team. We thank you for taking the time to watch this webinar and welcome any feedback. Our application can be found in the wealth management section of our website, www.fatprofits.com.au, or simply by clicking the link on the screen now. Alternatively, you can contact our staff to apply on 02 9024 6788 or toll free 1300 881177 or by emailing us at wealth@fatprofits.com.